Hi there, good morning. You're watching Market Cafe on ET Now this Monday morning with me, Snehi Shah, and with me is Ankita Saxena. Now, this is a show where we take you through all the important global cues that you should be tracking, all the important global updates coming in terms of markets or otherwise, and all the stocks that you should be keeping on your radar this morning, and the cues that you should be tracking for the coming week as well. With that, let's kickstart the show then. And Ankita, take us through the global handover. What did the US and European markets look like over the weekend?
That's correct, Sneha. Good morning to everyone. But the most important thing right now is GIFT Nifty is in the green and it is holding up, very well right now, and it is hinting towards a positive start. But the US markets ended the week in the red, and on Friday also they fell. If you look at the US markets, the S&P 500 and Nasdaq Composite posted fourth straight day of losses, longest losing streak since early May. Now, the economy added fewer jobs than expected in July, solid wage gains and a decline in unemployment rate points towards a stronger labor market, and on the back of that we did see a sea of red in the US markets. 79% of S&P 500 companies have also reported their numbers and they have given a beat in earnings. Now, for the week, the Dow Jones slid 1.1%, the S&P 500 declined 2.3%, and the Nasdaq sank 2.8% in trade. Now, the Dow and the S&P 500 each snapped 3 straight weeks of gains. The S&P 500 and Nasdaq booked their biggest weekly percentage drops since March. Now, Amazon was amongst the best performing stocks in the S&P 500 on Friday, was up 8.3%. Now, shares of Apple tumbled 4.8% to finish as the Dow's biggest loser in the trading session. Now, let's go across to European markets. European markets were bucking the trend and they ended the day slightly higher to close off a downbeat week for the European markets. Now, investors were digesting a series of corporate earnings and the Bank of England's latest rate hike, which was for 25 basis points. Now, the Stock 600 index ended up 0.3% after shedding around 3% in the past 3 sessions. Stock 600 posted weekly losses in 4, and FTSE snapped a 3-session losing streak on Friday, buoyed by gains in energy stocks that were up 0.4%. And DAX was also up in the green, up 0.3%. So largely the European markets ended the day in the green, whereas the US markets ended the day in the red, Snehi.
Absolutely. With that, let's also look at what oil did then over the weekend. And oil prices rose more than $1 a barrel on Friday to record a 6th consecutive week of gains after top producers Saudi Arabia and Russia extended supply cuts through September, adding to the undersupply problems. Now, Brent crude futures rose almost $1 or 1.3% to settle just above that $86 per barrel mark, while WTI crude gained $1.02 or 1.6% to close at the $82.8 a barrel mark. Now, both benchmarks have hit their highest level since mid-April on Friday, but it's also key to remember that Saudi Arabia on Thursday extended a voluntary oil production cut of 1 million barrels per day to the end of September, keeping the door open for another extension. On the other hand, you've also got Russia. Russia has also elected to reduce its oil exports by 300,000 barrels per day next month. On the demand front then, global oil consumption could grow by 2.4 million barrels per day this year. This is the word coming in from the Russian Deputy Prime Minister Alexander Novak, and this is what he said on Friday after a ministerial panel meeting of the OPEC Plus group was held regarding the oil supplies. So this is what largely oil is doing. Both indices in the green. You've got WTI as well as Brent crude ending the week in the green. Let's see how this pans out for oil then, Ankita.
Alright then, Snehi, then let's quickly take our viewers through the events we will be tracking through this week. Now, first up, very important, we have the RBI policy coming out this week on the 10th. That is the date that they will be announcing the policy. Also, we have in the India Inc. Earnings, we have Hindalco, Coal India, Adani Ports that will be reporting their numbers on August the 8th. On 10th of August, we have Grasim Industries and Hero Moto. We also have Apollo Hospitals and ONGC that will be reporting its quarter numbers on the 11th of August. Moving on then, in the IPO action, we have, it is the last day to subscribe for SBFC Finance IPO as of today, and Yatharth Hospital will be listing on the bourses as of today. And tomorrow, of course, we have the last day to subscribe for Concord's IPO. Moving on, then we have TVS Supply Chain's IPO solution that will also be opening up for subscription from the 10th to the 14th of August. That's the date for TVS Supply Chain Solutions. And we have AGMs for Tata Motors on the 8th of August. L&T and Hero MotoCorp will be holding an AGM on the 9th of August. 10th of August, we have Tata Steel and HDFC Bank, Ultratech and Biocon will be holding their AGMs on the 11th of August. Let's go across and see what the global cues are looking like. On the 10th of August, we have the US CPI numbers and the US initial jobless claims number that will be coming out. Very important data to watch out for the next rate decision. On the 11th of August, we have India industrial production, the US PPI, UK industrial production and the UK GDP numbers that will be coming out. So an action-packed week there, Snehi. We will be tracking all those events very closely for you.
Lots of cues to watch out for in this week, so we'll keep an eye out on all of those cues. But with that, let's shift focus to all the top stories that we're tracking for you this morning, coming from across the world. And JP Morgan Chase has recently announced that they are no longer expecting a recession in the US. The bank has gone ahead and raised their economic forecast as the economy expands at a healthy pace. The firm has increased its current quarter real annualized GDP growth estimate to 2.5% from 0.5%.
And Berkshire Hathaway delivers a solid set of results for quarter 2, a 6.6% year-on-year increase in profits. Meanwhile, the cash hoard at Warren Buffett's conglomerate swelled at nearly $150 billion. The strong results were bolstered by a jump in Berkshire's insurance underwriting and investment income.
Staying with earnings then, Danish shipping giant Maersk reported a sharp fall in second quarter earnings on the back of plunging container rates, but still managed to beat expectations and upgrade its full year guidance. The company has also warned of a deeper pullback in global shipping container demand and now expects volumes to fall by as much as 4% versus a previous worst case scenario of 2.5% as companies cut their inventories amid recession risks in Europe as well as the US.
And Barbie finally joins the $1 billion club as ticket sales tops $1 billion and worldwide. According to a statement issued by Warner Brothers, the fantasy comedy movie has taken in $459 million from domestic theaters, including the United States and Canada, and another $572 million overseas since it hit the theaters.
All right, with that, let's look at some political action coming in from our neighbors Pakistan. Then an ex-Pakistani Prime Minister calls for nationwide protests after he was sentenced to 3 years in jail over corruption allegations. He was found guilty of not declaring money earned from selling gifts he received while in office. He denies the charges and says he will appeal.
All right, with that, it's time for us to slip into a short break. You don't go anywhere. After the break, we go domestic. Welcome back. You're watching Market Cafe with me, Ankita Saxena, and with me is Snehi Shah. Let's move on to news coming in on the domestic front. And the big news is that the big tech giants like HP, Apple, and Samsung are halting new imports of laptops and tablets into India. Now, this after the Indian government announced curb on such imports, restricting them to only licensed vendors. Now, IT Ministry sources have clarified that the timeline for these licenses will be extended and notified via a notice very soon, claiming that companies will get sufficient time to apply for licenses. Sameer Dikshit is here with more details on this.
In a major development related to the government decision to restrict the import of laptop, tablet and personal computer, now Minister of State Rajiv Chandrasekhar has announced that there is going to be a transition period that will be put in place and the notification will be released soon. This simply means that the restriction on the imports may not come into effect immediately, but yes, there will be a transition period that will be given to the industry, that will be given to the stakeholders, and this transition period will help to adjust to accommodate with the new step that government is thinking and is all set to take. So this transition period, what is going to be the quantum, the days that government will decide, and all those details will be notified very soon. But Rajiv Chandrasekhar has made it quite clear that government will support the industry, and this transition period, which was a demand, which was something that government was receiving feedback, that will be taken into account, and the decision or the notification will be released soon. In addition to this, the minister has also said that this entire decision of restricting the import of laptop, tablet, or even the personal computer, it is not just putting an end to license Raj, but it also means to boost domestic manufacturing, providing a reliable and secure hardware to the Indian tech companies, and also giving push to Make in India mission. So that's the whole intention of the government. Now, talking about the transition period. So the sources have not, it is not totally confirmed, but sources have indicated that this transition period could be somewhere around 1 month, 25 to 30 days. So that sort of transition period might be given to the industry. As of now, if you see the overall figure numbers, so in the first quarter, around $19.7 billion was the import figure. India imports around 1.5% of the total import of this particular electronic item, and a high dependency is there on China. So by this move, government aims to reduce the dependency from China and also give push to domestic manufacturing, and also encouraging them to come forward and take the advantage of the production-linked incentive scheme.
All right, thanks Samir for all those details. Let's move on then. And there's no relief coming in on import duty to solar projects. The Finance Ministry has refused to give relief in basic custom duty to solar projects awarded before March 2021. Let's go across to my colleague Prakash Priyadarshi, who has more details on this. Prakash.
Yes, it's a big setback for solar power generation companies, as Ministry of Finance has rejected the proposal submitted by Ministry of New and Renewable Energy to provide relief in basic custom duty to the companies, especially for projects awarded before March 2021. As you are aware that the government had in March 2021 imposed 25% basic custom duty on import of solar cells and 40% basic custom duty on import of solar PV models. This decision was taken to discourage imports from China in order to enhance domestic manufacturing capacity. But it has not gone well with the industry. It approached the Ministry of New and Renewable Energy soon after that to provide relief, considering insufficient domestic manufacturing capacity. Industry has also asked government that industry will have to be dependent on imports to meet domestic requirement in order to complete the projects on time. Considering all this, Ministry of New and Renewable Energy has approached Ministry of Finance to provide relief under grandfathering clause. MNRE has asked Ministry of Finance to provide relief, especially to those projects awarded before March 2021. After that, Ministry of Finance has held several meetings, made deliberation with all stakeholders, and now sources are informing that the Ministry of Finance has rejected this proposal and are not in favor of providing relief in basic custom duty to the solar power generation companies. Clearly, it's a setback for solar companies, as approximately 30,000 megawatt capacity of solar power projects are going to be impacted.
And while moving on then, India, the world's second largest wheat producer, is considering scrapping a 40% import tax on wheat to control the domestic prices. And the move aims to make overseas wheat purchases more attractive. Recently, India banned certain rice exports to manage food costs, leading to a surge in rice prices in Asia. Now, the potential removal of the import duty could benefit the flour millers in southern India and elevate rising wheat prices. The most recent wheat harvest may have been affected by the weather damage, further impacting the production.
All right, with that, let's get a move on then. And it seems like EdTech major Byju's troubles are not going to be over anytime soon. Sources tell your channel that the startup has missed its 3rd August deadline for amending the terms of its loan from the TLB facility. This amendment is supposed to end litigation and avoid enforcement actions. At the same time, Byju's has missed the last interest payment amid the NYC court case against lenders. In a statement, Byju's has cleared the air, saying that the discussions are still on with the lenders and August 3 was not a deadline but a date when a sign-off was expected. My colleague Anurag Joshi is here with what he's picking up. Anurag, over to you.
EdTech giant Byju's has missed a deadline to amend the terms on its $1.2 billion Term Loan B facility with its lenders. Byju's and the lenders had last month agreed that the company will work towards executing and completing the amendment to the TLB facility by August 3rd. And this deadline has now been missed. Byju's and the lenders have been embroiled in a legal tussle since March, when the lenders had dragged Byju's to a court in the US and sought an acceleration for the TLB facility. The amendment would have helped stave off the TLB facilities acceleration, and Byju's would not have had to make an immediate repayment on the facility, and also would have avoided any enforceable actions from the legal actions from the lenders. This amendment had three features, which are that Byju's would increase the coupon payment on the loan. There would be a part debt pay down, and there will be increased investor protection features on the facility. In June, Byju's had sued the lenders in a court in New York and had demanded that one of the key lenders be stripped of his rights to enforce any actions, and had also challenged the acceleration event in the court. This came on the heels of Byju's missing an interest payment on the TLB facility in early June.
And well, moving on then, in stocks to watch, Cipla's Pithampura unit has received an OAI status from the US FDA. Now, what does that mean for the company? Well, my colleague Somit is here to tell us more.
Well, if you see Cipla's Pithampur unit, which is the inner unit, has got an OAI status from the US FDA. Now, this unit was inspected by US FDA from Feb 6 to Feb 17th, and they had given out around 8 observations. Now, post this, if you see, there are two major plants of Cipla, that is the one in Goa and the second one in Indore, which are currently non-compliant with US FDA guidelines. Now, what this OAI status means, that it means that the facility is considered to be in an unacceptable state of compliance. This means that the company needs to improve its manufacturing facilities for new product approvals going forward. However, the OAI status will not halt sale of the current ongoing products, and this plan approximately contributes nearly 5% to the top line of Cipla. Now, this OAI notice that has come in from US FDA is likely to delay the approval of one of its key product, that is Advair, which is a respiratory drug, and this in the US market. Now, analysts were already expecting an OAI for this plant, and hence they had not assumed any sales revenue coming in from this new product in FY24. They were expecting it in FY25. However, given the fact that OAI has now come in, analysts are also also thinking that the launch of this product could further be delayed, and this product would be launched by the end of FY25, because sometimes approvals can also be delayed up to 24 months. However, on the positive side, one part of the street was believing that given the recent recalls in drugs and the 8 observations, the Indore plant could well see an import alert. So the OAI kind of clears an overhang on the share prices. Now, had it been an import alert, the ongoing sales would have also been halted from this plant. Hence, that overhang goes away from Cipla. Now, recently we had seen a sharp run up in the share prices of Cipla on the back of the news where the promoter is looking to sell stake to PE, strong earnings performance given that there was a sequential improvement in the base business, and also the company had upgraded its US revenue and margin guidance for FY24.
Alright, thanks Somit for all those details on Cipla. We will be keeping an eye out on that stock today. But with that, let's quickly slip into a very short break. On the other side of the break, we'll tell you about all the stocks that you should be keeping on your radar for today. Welcome back, still watching Market Cafe on ET Now. Now, before the break, we told you we will be taking you through a list of all the stocks that you should be keeping on your radar this Monday morning. And we are being joined by my colleague Lisa to take you through just that. Lisa, good morning.
Good morning. So let's start with the earnings first. Starting with Bank of Baroda, they reported their earnings. The net interest income that was up 24.4% on year-on-year basis, while the PAT that was up 87% on Y-on-Y basis. But the GNPA as well as the NNPA that was slightly down on a sequential basis. The GNPA that stood at 3.51% versus 3.79% sequentially, while NNPA that was at 0.78% versus 0.89% seen the previous quarter. Moving on to Zen Technologies, they reported a strong quarter. The revenue was up 257% on a year-on-year basis, stood at 132 crore. The margin also saw a sharp expansion. It stood at 52% versus 29% on year-on-year basis. Moving on to CE Info Systems, the revenue was up 23% on quarter-on-quarter basis. Margin was steady at around 41%, and they appointed Mr. Rohan Verma as the executive director of the company. Now, moving on to some corporate announcements, there has been some key management announcements where Delta Corp, Mr. Hardik Debar, who is the CFO, he has resigned. That is to take, and the reason is that he has to take on some new professional challenges. And also Biocon, they have announced key leadership appointments. They have appointed Rhonda Duffy as the COO, Sandeep Athalia as the CDO, David Gibson as the global head. And now moving on to the other companies, Oil India. The government of India has elevated Oil India to Maharatna category, and it is now the 13th Maharatna CPSE in the country. ICICI Bank also has received approval from the RBI, that is to increase the shareholding in ICICI Lombard General Insurance Company in multiple tranches, and that will be up to 4%. And lastly, ICICI Bank has this will be 4% in ICICI Lombard General Insurance Company. So that was on the last stock, and these are the stocks that will be on investors' radar for today.
All right, thank you so much for those details, Lisa. We'll move on then, and we have my colleague Vamakshi who's standing by with all the brokerage notes that came in this morning. Vamakshi, tell us, what are the brokerage notes saying? What are the stocks that we need to keep on our radars?
Well, yes, let me first start off with SBI. We have a couple of brokerage notes, and all of the brokerages are highlighting that the decline that was seen in the net interest margin was faster than expected. A weaker NIMs did see a drag on the top line as well as operating profits, but nevertheless, the net profit was higher than what the street was penciling in, and mainly that was on account of credit costs that were lower. Muted loan growth was noted by the brokerages, but the asset quality was largely stable for SBI. So given all these factors, Jefferies has actually maintained a buy rating. Macquarie has maintained an outperform rating, while CLSA has maintained not just its buy rating but also hiked its target price by 25 rupees to 725 per share. Keep an eye out on M&M as well. We did see the company report its numbers. We have a brokerage note coming in from Nomura, and they have highlighted that the Q1 numbers were slightly better than what they were penciling in. They believe that the investment in RBL Bank has a strategic objective. As far as the SUV growth outlook is concerned, they're appearing to be quite positive, and in fact, overall, in the auto pack, M&M is their top pick. So all in all, Nomura has maintained its buy rating and also hiked its target price from 1,790 to 1,978 rupees per share. And lastly, keep an eye out on delivery. We have a note coming in from Morgan Stanley, and Morgan Stanley has highlighted that delivery could sustain strong 18 to 20% revenue CAGR for a long period of time. Over the medium term, they see adjusted EBIT margins of nearly 5 to 6% with asset turn of 3 to 4 times. So all in all, they've downgraded their rating to equal weight from overweight, and that is mainly on account of less comfort as far as valuations are concerned. But nevertheless, they're expecting incremental margins to normalize, and they've gone ahead and hiked their target price from 405 to 460 rupees per share.
All right, thanks Vamakshi for taking us through all those brokerage notes. Then we will be tracking these stocks in trade today. But let's move on, and Gujarat Pollution Control Board has served a closure notice to Naveen Florine. Now this is coming on the back of violations regarding air pollution norms. Let's go across to my colleague Lisa, who's joining in again with all these details. Lisa, take us through what's happening.
Well, so Naveen Florine, they have received a closure notice from Gujarat Pollution Control Board, and this is for their Dahej facility. They had received the notice on 4th of August. On the 15th day, they have to pay the environmental damages of around 1 crore penalty which has been received, and the closure it's related to violations relating to the air pollution norms. Now, Naveen Florine management in the notice, they have in the announcement, they have mentioned that ascertaining the financial implication of this, that is uncertainable and difficult as of now. According to Centrum Broking, so they say that the Dahej plant that remains a driver growth engine for Navin Fluorine, because there are important plants like HPP, HFO, as well as dedicated agrochemical plant that has been set up in the Dahej facility. HFO plant that is seeing some challenges, so this is like a big concern for Navin Fluorine. So the closure is certainly likely to impact the Q2 financials going forward. And they also added that interpretation of the 15 days closure, that is ambiguous and uncertain for now. Whether the closure will be for 15 days or not, that is uncertain. But if it's closed for 15 days, then the financial impact will be for 40 to 50 crore financial impact that Navin Fluorine will have to face, and that could trigger a negative reaction for the stock today. So keep a watch on Navin Fluorine today.
All right, thank you so much for all these details, Lisa. We'll move on then, and we had Delivery that reported its quarter numbers on Friday, and we did see the losses narrow down to 89 crores. They were down 77% on a year-on-year basis from to 89 crores. Now, if you look at the quarterly results, the losses have narrowed significantly in the quarter, and both on a year-on-year basis and on a sequential basis as well. Now, the consolidated revenue, on the other hand, we saw that increase by 10% on a year-on-year basis to 1,930 crores. Now, the adjusted operating loss also narrowed significantly to 25 crores from 217 crores a year ago. And the express volume shipments also saw a growth of 19% on a year-on-year basis to 182 million in the quarter. Now, we also saw the volume grow by over 2 million shipments from March quarter, even though the June quarter is traditionally, seasonally weak quarter for the sector. But we did see the growth coming in there. The revenue from the express parcels also grew by 14% on a year-on-year basis. The revenues from the part truckload services rose 34% on a year-on-year basis to 347 crores due to increased volumes and that were achieved through consistently high service quality, and that's the reason why we saw the part truckload revenue also increase a good 34% on a year-on-year basis. Now, also we did see the truckload and the supply chain services business saw a robust sequential revenue growth, both up 20% and 10% respectively. And if we look at the management comments also, they, according to them also in Q1 FY24, they expanded the capacity and network footprint in line with the growth expectations in the second half of FY24. And they also said that they have won important contracts in Q1 from marquee clients like Havells, Tata Motors, Mama Earth, which they expect to reflect in the coming subsequent quarters. So those were the numbers and the roundup of numbers coming in for delivery there.
Alright, thanks Ankita for all those details. Let's stay with earnings then. And Britannia has reported a mixed set of Q1 numbers. Now, the FMCG majors profit after tax jumped 35% on a year-on-year basis, while revenue was up 8.4%. On an overall basis, the profit after tax was below expectations and the EBITDA was also below expectations. On the other hand, revenue though was in line with street estimates. Let's deep dive into the numbers a little bit, and on a consolidated basis, on a year-on-year basis, revenue was at 4,011 crore versus 3,701 crore, up 8.4% on a year-on-year basis. Net profit was at 458 crore versus 377 crore, up almost 36% pardon me, on a year-on-year basis. EBITDA at 688 crore versus 501 crore, up 37%. Margins, on the other hand, also saw expansion at 17.2% versus 13.5%. Now, let's look at the key highlights of Britannia's Q1. Employee cost came at 188 crore versus 147 crore, up almost 28%. Volume growth is expected to be in low single digits and the gross margins have improved. This was aided by premiumization, correction in raw material cost and price hikes. Let's also look at the key commentary coming in from the management then. They say commodity prices have marginally softened, local competition has intensified. Certain price corrections initiated to remain competitive, and strong on-ground execution will also reflect in rural performance, and it will help in the overall tepid rural demand. It might aid that going in the future. So this is the commentary coming in from Britannia, mixed set of numbers coming in from this FMCG major.
All right, moving on then. India's largest lender, State Bank of India, has reported a jump of 25% in its net interest income for the quarter gone by compared to the same time last year. Let's go across to my colleague Harsh Saita, who's standing by with all the number crunching there.
Let me quickly run you down on all the numbers. First off, that slippage number 7,600, well below what the larger number that was penciled in, around that 8,500 to 9,000 crore number was penciled in with regard to slippages. So definitely a better number on the asset quality as well as provisioning as well as slippages front across that board. Of course, it's a thumbs up. But let's first look at your net interest income. Your top line has not gone up. It's a slightly softish quarter where net interest income is concerned. It's gone up to around 38,905 crore. We were penciling in a number of around 40,000 crore on that front. It's a 25% growth. So the NIMs have definitely taken a bit of a knock there. But your operating profit has come in much better than what we were penciling as well as the street was penciling in. It's come in at 25,000, almost 25,300 crore. The number we had penciled in was around the 24,000 crore mark. What is really aiding operating profit? One is your OPEX has come in much lower than what most were penciling in. So that's what's aided operating profit despite the lower NII number. When I'm comparing operating profit this year versus last year in Q1, it's definitely sizably better, 98% higher. And that's on the back of treasury losses booked by SBI in Q1 of FY23. So that may not be the best, most comparable metric. Let's also look at provisioning. We were expecting a 3,500 odd crore provisioning. It's come in 30% lower than our expectation. It's come in at 2,501 crore. And profit after tax, therefore, has been a beat on the back of lower OPEX and better asset quality. Your profit after tax has come in at 16,884 crore, which is a solid 178% jump on a year-on-year basis. So you're seeing a much better PAT number than what we were penciling in. The ROA is coming in at a comfortable 1.22. They've maintained that ROA number of 1.2+%. Where your loan growth is concerned, it's come in at roughly 14.5+%. That's again quite healthy, but not as good as we had anticipated. And your deposit growth number has come in very, very healthy at 12%. That was largely in line with what the street was penciling in.
Our domestic loan book has grown to the extent of 15%. Though when we look at the bank as a whole, we have grown at about 14%. Because international book, we have consciously decided to grow at a lower pace, considering the fact that the global economies are in a very volatile situation, and we are very mindful about our risk appetite in these overseas geographies. So that is something, one of the major factors. Apart from that, what we have also seen is that our loan book is much better in terms of quality, and that is why our requirement for provisioning is much lower. And the last but not the least is also the fact that the MTM, which was there in the first quarter of the previous year, is not there this year because of the yield movements. And last year we had a MTM to the extent of about 7,000 odd crore. We don't have that kind of a.
All right, that's the word coming in from the top boss at SBI, Dinesh Kumar Khara. But let's move on then. And grain ethanol companies will be in focus as the Food Corporation of India suspended supplies of surplus rice for ethanol production. What will be its impact on the companies? My colleague Achesha is joining in to decode all of that.
Well, yes, grain ethanol companies will be in focus, the likes of Global Spirits, BCL Industries. Remember, just to give you a brief background, it was on the 26th of July that FCI, or the Food Corporation of India, went ahead and suspended supplies of rice for production of ethanol. These companies, of course, came ahead and clarified that this is a temporary disruption. They are resorting to other sources of raw material in order to ensure smooth production of ethanol. Now, an update has come in with respect to this. OMCs have gone ahead and hiked ethanol prices for ethanol that is produced from broken rice as well as from maize. So they've gone ahead and hiked prices by about 4.75 rupees per litre for ethanol that is produced from damaged food grains, and by about 6 rupees per litre for ethanol that is produced from maize. So yes, an important update that has come in. It will be beneficial for all of these grain ethanol companies. It will probably reverse the negative impact of the increase in raw material prices that they were to face, and also a push for India's ethanol blending program. So an important update, and all of these counters will be in focus today.
All right, thank you so much for that, Ashesha. We'll move on to an exclusive with one of the veteran bankers in the country, KV Kamath, who spoke to my colleague Astha Chopra on the status of the green lending and provided updates on the CBDC regulations. Let's go across and listen in to what he had to say.
I think the distinction in funding, using green or non-green funding, the basic difference is, I would say, the terms, which could be slightly softer, I think is today becoming narrower. But 10 years back it was distinct, and I'll put it in context. 10 years back, let's say, solar power was in India 12 to 15 rupees a unit. It's today 2.5 to 3 rupees a unit. So at 12 to 15 rupees a unit, it needed green funding, meaning sustainable funding at lower cost. Today it can be funded through normal funding. But it's still green. Your end use is green because the power generated, you term it as green.
So do you think that deposits in the banking sector will come closer to the lending factor?
Yeah, indeed, I think they are in sync as of now. You will see a change that is happening because if going back a few years, maybe 15, 20 years, the primary saving source for people at large in terms of financial instruments was bank deposits. But over the last 20 years, you've got other products that have come up, particularly mutual funds and insurance products and pension products. So given this, the saver now has a choice, and some of these areas may grow at a faster rate. So the deposit rate of growth of deposits in the banking system could be slower than what it was in the past, but it is still sizable because the overall pool has increased of annual savings has increased. So we will see growth across financial instruments as we go along.
So as we understand, wholesale CBDC can be a game changer for cross-border payments. How much benefits you see from the retail CBDC in the coming days?
I think this is an instrument, as any central bank digital currency is the way to go. That I think there is no question. How it will be used in terms of settlement, in terms of overseas transactions, I think the regulators are now and the policymakers are finalizing, but I think it should catch on very well.
All right, with that, we're completely out of time on this edition of Market Cafe, but stay tuned to ET Now because the market will take all the action here.